Beware, scammers are getting smarter, and with mobile money and digital payments, it's easier than ever to fall for a fake deal. Don't get caught. Before you send money or invest, make sure you're dealing with a licensed financial service provider. Protect your money. Stay alert. Be a smart investor. This message is brought to you by the Securities and Exchange Commission, protecting investors in the capital markets.
Well, it's a beautiful Thursday, the 14th of May in the year 2026. Thank you so much for making the time to join us for tonight's edition of Money Mysteries series. I'm your host. My name is Andrew Mwansa. Now, the Money Mysteries television series is a flagship investor education initiative developed by the Securities and Exchange Commission as part of its mandate of investor protection and market development. By promoting financial literacy and market confidence, the series is designed to simplify complex investment concepts and address the growing need for public awareness on prudent financial management and fraud prevention. It provides relatable, real-life scenarios that mirror the financial decisions faced by ordinary Zambians, and each episode explores common investment pitfalls, emphasizes the importance of due diligence, and provides practical guidance on navigating the capital markets responsibly. Tonight, we focus on educating the viewers on the market downturns, long-term investing, and managing key investment risks. My guest this evening is Mr. Phillip Chitalu, who is the CEO at Securities and Exchange Commission. Mr. Chitalu, good evening. Thank you so much for making the time to appear on this prestigious program.
Good evening. It's good to come back to this station. I haven't been here for a while.
It's good to see you.
Yeah, thank you very much.
Well, you too could be part of the program by calling us on the number that is reflecting on the screen, but also you can take advantage of the program that is streaming live on our Facebook page. That's at Diamond TV Online. This program is streaming on that particular page. For now, let's recap on what happened last week on Money Mysteries.
Hi, Chipo.
I've been trying to call you.
Oh, yes. You know, I've been busy.
Busy doing?
Okay,
Viti. Why you on a boza yako ka? Why you on a boza yako? Sometimes you come back sorry na iwe.
Okay, sorry. Hey, and bunch of
Nezo too, because have you heard about these new crypto platforms that are promising great returns? Everyone's talking about it.
Oh, yes. But I think it's too good to be true. I mean, we need to be very careful.
Yeah, but this could be our chance. Imagine what we could do with this. We could travel, we could buy that G-Wagon, we could start our businesses.
Relax, okay? I've been doing research about this and it's very dangerous, okay? It can be dangerous in the wrong hands. We need to be very careful because there are scammers everywhere and they are targeting young investors like us.
You worry way too much. I think You're just a little bit paranoid. Listen, everybody's making money off of it, so why shouldn't we?
I just don't trust them.
That's on you. Then I trust them, and I know what I'm doing. We need to do more research. Okay. And
Yes, people. Ha. Hey, stay calm. Did you take down any information? Can you contact anyone? Oh, relax. I'll be there in a bit. I'll be there. Relax.
Watch out for the next episode. This movie is sponsored by the Securities and Exchange Commission, the regulators of capital markets in Zambia.
Well, that was the episode for last week. CEO, welcome back. Me and you were just watching that episode, quite an interesting episode that we're watching. But I think what we consistently kept hearing from last week's episode was shares being mentioned quite a lot. Mm-hmm. What exactly are shares?
It's a very good and interesting question. I went to a boarding school, and you'd be served in a big plastic bowl, yeah. And you'd reach a share out, either the nshima, the beans, and sometimes rice, as it were. So I think that's a good start. A share is basically a portion of something big. I think in mathematics and the pie charts and all these things, those of us who were born in the 70s, we also used to play a game called share with a knife. You know, you drew a circle. So basically, a share is a portion of something big. Now, when it comes to investing and companies and organizations, it's possible that just like a small boarding school share, you could get a share of the company. So which means your benefits are limited to that small share that you have. That's the way companies operate. They have a number of people that put in money in a business, and each of those people putting money in the business are given a share in relation to how much they're putting in a business. So that's where the word shareholder comes from. You are holding a share, a particular share. So to start with, it's a small component. It's a small holding that you have in a particular business. That's basically, in a nutshell, what a share is.
How do they really work now?
You know, let's suppose you and me want to do a business.
Yeah.
Okay? And if we both have 100 kwacha each, we can put it together, and that becomes 200 kwacha in the business. And because we have put in 100 kwacha each, that means 100 divided by 200, that's 50%. So which means you have 50% of shares in a particular business. And when it comes to sharing the proceeds, like if this business is, for instance, doing trades on the street,
yep.
We go and buy, what's popular on the street is things like phone chargers, and things. We go to Kamwala, maybe in a wholesale shop, we buy 100 of those, we go on the street, start selling, which means when we make profits, we sit down again and say, you own 50%, I own 50%, we've made 100 kwacha today. If we have to share that money, that means 50-50, and that's why businesses operate. Now, expand this to a number of shareholders, like the companies that are listed on the Lusaka Securities Exchange. Some of them have thousands of shareholders owning small portions of Zambia Sugar, small portions of Zambif, small portions of Standard Chartered Bank, small portions of a lot of other listed companies such as the CECs and the Pamozis, the Chilangas, and all these things. Basically, what they're owning is they literally own part of the business, and the representation of owning that part of the business is what is called a share.
The challenge is that if there's no profit, there's nothing to share.
Well, this is the beauty and about ownership, right?
Yeah.
Ownership, you need to generate value. But if there's no value being generated, then it becomes what you share. So there's nothing to share. So, but you should hold accountable the managers, because they are the people who are supposed to be creating value for you. So this is why shareholders on an annual basis get to attend what are called annual general meetings. So that the managers can report back like, guys, how did you perform in the last 12 months for the business that we've given you to run. So on a small scale, you and me would be shareholders and will be fully involved in running the business because it's small and because maybe that's the only source of employment. Now imagine these 3,000 shareholders in a big pan. There's no possibility that each of the 3,000 shareholders will be having a role in running the particular business, because some of them may not even have the skills required to run that particular business, but they entrust management, they appoint management, they recruit experienced managers to run their businesses. Their role is to get a dividend and a few other rights, to vote out, to vote in people who are involved in running the business. So that's how businesses operate. Now the beauty is, if 1 million people put just 20 kwacha each, suddenly we've got 20 million kwacha, which is equivalent to almost like $1 million. So we can do together bigger things than we can do with our individual 20 kwacha. So that's the beauty of working together, and then you maintain your share.
CEO, tonight we are looking at educating our viewers on the market downturns, long-term investing, and managing key investment risks. I want you to broadly speak to that subject before we get into the details.
Yeah, I think you did ask a question, what happens if there are no profits? So those are sometimes the downturns. But then you could also be involved in a business that just faces a market failure. Let me call it a market challenge. Let's say your product is no longer required by the market. Can you imagine what happened in the COVID times? People were running bars, restaurants, and associated businesses. Suddenly they were just out of businesses because we are all now just sticking to our homes, right? So businesses can get affected by just the general failure of the market. It's not that they are bad shareholders. It's not that they are bad managers. It's just that the market no longer exists because of COVID or because of another calamity or just a general change in the market requirements. So that's one of the risks. So when the products are not being sold, that means there's no sales. That means there's no profitability. So what do you share? So that's a downturn. Now, sometimes it could be a complete shutdown of the market, or it could be a reduction in the way your goods and services are demanded by the people, which results in lower business. Let's assume that you used to sell 1 million products every year. And now, because the market thinks otherwise, or they've got alternative alternative products meeting their needs, now suddenly you're only selling 500,000, which means your market goes down, right? Your profitability goes down, and you make losses. But most of the times, these are cyclical. They go up, come down, go up, come down. And this is the beauty of capital markets, where once you hold shares, you can hold for the longest term, so that you ride the waves, which means going up, and through experience, through observed performance patterns, you know that this is just but a season. We're gonna go up and make money. Imagine if you are a seasonal farmer, right? So from about when you're just planting, you typically have no sales. Okay, if you're growing maize or wheat or something like that, there are periods when you typically have no sales. But then you have your August or your after, I think wheat is planted in May, harvested in August. you suddenly have the sales. So you could have this cyclical nature of the business, which is just seasonal. So if you join the business in the season when they are planting, you think they are not such a good business.
So it's normal that the business must go up and down.
Just as the way businesses operate, because
or there's a possibility that the business could just be shorted.
have you seen that what has happened to copper? There was a time when even the copper prices went down because there wasn't just enough demand for copper.
Yeah.
But in the last couple of years, my God, I mean, copper prices have just been going up because of all these electric vehicles and other products needing copper. Suddenly, copper has been riding the wave.
Yeah.
It's possible that somebody comes up with a different material that goes into EVs, and then suddenly maybe
the demand
begins to go down. So these are normal business cycles that people should be able to understand. And to understand that if I'm not selling the products, I'm not making money. And if I'm not making money, then I'm not being as profitable as I was maybe when you tried or when you entered into the business.
If I'm doing a small business and if there's a period I'm making money and I stop making money, my direct instinct is that probably I should change the product because maybe people do not need this product anymore.
I think that's the biggest mistake we make as individuals. We are very, very short-term in the way we look at things, and in that process we lose the experience. I mean, if you've been keeping chickens, I think somebody who's been keeping chickens for 10 years, they've accumulated a lot of knowledge that helps them run the business better. But because now I see Mr. Mansa is making money in chickens, I joined him with the little experience that I have. All of them could probably die and make losses. Then I jump out. I see somebody else is into maize marketing. I join them. I don't even know that trucks get to have a lot of breakdowns delivering maize. Then I see all these problems. Then I jump out. So you lose the opportunity to learn the business, to learn the risks and opportunities that are found in that business. But remember, we're talking about shares and the profitability and the shareholders. So all these kind of problems or opportunities do affect the profitability of a business, either positively or negatively. If you look at the 23 listed businesses that I mentioned, the Stanchards, the Zambies, the Chilanga, they have been in the same business
for a long time.
For a long time. I think one of the first companies to list on the Lusaka Securities Exchange is Chilanga Cement, like before 1996 or thereabout. This is like 30 years, right? They've just been producing cement, despite the fact that there have been other entrants in the market. But I think they understand the business better, and they know that there will be times when people are not building, then less cement is sold. There's a time when we're building roads that require a lot of cement, then the sales go up. The same with banks, the same with agricultural companies. The opportunities to export maize for some time, then your sales go up. There are other times when there's a drought, the business just goes down. So we need to understand all these things as shareholders, that there are other factors other than the quality of management that can affect the business.
Let me ask this question, CEO. Who could be a shareholder in a company? You're mentioning very big brands. And for my colleague in Kalingalinga, they're probably thinking it's for bigger boys. This talk CEO is talking about is for the bigger boys.
I think that's why we are here, just to try to break it down.
I'm a student at the University of Zambia, and just speaking about Chilanga and all these big companies.
What we have now in the market, just to speak to the younger generation, I think the Lusaka Securities Exchange now has an app, because the younger generation is into apps and phones. And so we want to increase accessibility to these products using phones, using apps. I think if they went to the Lusaka Securities Exchange, they should be able to download an app they can use to buy even 1 share or 2 shares. I've got a nephew in Kitwe. He's constantly buying shares for as little as a 50 kwacha, 100 kwacha.
Is it so?
Because share prices, some of them are like 3 kwacha or 15 kwacha or 17 kwacha. So instead of wasting away 100, I could invest for the long term. I start putting aside 100 kwacha every month. By the end of 1 year, I've put aside 1,200 kwacha. And mind you, if I've put money in a profitable business, then I should be able to get a dividend, which is a share of profits, because even with one share, you are a shareholder in a big brand company. You'll be treated in the same way as a person who has 1,000 shares or 1,000,000 shares. The only difference is when it comes to sharing the spoils, right?
Yeah.
You have one share, I've got 1,000,000 shares. There's no way we can share
equally.
But each share receives an equal proportion. Let me give you an example. For argument's sake, we invest in a business where there are 1,000,000 shares and the business makes 1,000,000 kwacha. And they decide to give away the entire 1,000,000 kwacha, which means 1,000,000 divided by 1,000,000 is 1. Which means every share is entitled to 1 kwacha.
1 kwacha.
So a person with 500,000 shares receives 500,000. My 10 shares, that's 10 times 1, I only receive 10 kwacha. So the more you invest in a business, the more you receive the dividends. But mind you, we've already talked about the cyclical nature of business. There will be periods where we may not receive any dividends because the business hasn't made any money.
And dividends are received at after how many years?
There are no years. There's nothing that is prevents a business from giving dividends in the first year. It's about profitability. It's about the planned use for the profits that have been generated. Let me give an example. The same example that I was talking about. We start a business of selling earphones and all these chargers and the like. And because we want to grow our business, we are making 100 kwacha profit every day, but we say we want to become a 10,000 kwacha business. So instead of sharing these 100 kwachas every day, we add them to the capital so that we can buy more phone chargers, more phones to sell, so that we grow. So businesses do exactly that. So sometimes they may not give out dividends because they want to grow. And the more growth, the higher the value of each share. We could have been making 1,000,000 kwacha because we were small. Now because we are big, we are maybe double the size, so we start making 2,000,000 kwacha. So in my example of 1,000,000 shares, now that we are making 2,000,000 kwacha divided by 1,000,000 shares, each share is now possible to get 2 kwacha instead of the 1 kwacha that was being paid when we are only making 1,000,000 kwacha. So the little thing that people are doing on the streets, they are mimicking how businesses operate, except these businesses that are listed, issuing shares, do it in a more formalized manner, which reduces disputes, because there are records, there are documents, everyone knows what they own, everyone knows when the sharing should be done. It shouldn't just be like your friend shows up on Tuesday morning and say, can we share the profit? We'll be like, no, there are rules. We have agreed the profits that can be shared and when they can be shared. I think that's the only difference. So it brings in a lot of transparency and discipline in growing our business.
So you'd really highly recommend that people get to buy shares?
Yes, it is. Actually, we should be starting to buy shares when we are in primary school, when we're in secondary school, because over time, what we've seen is if you follow the index, the Lusaka Securities Exchange Index, an index is basically tracking the movement of the value of the companies. We've seen that over time, there's a lot of growth. Over time, I'll give you an example, and I'm not promoting any companies. I'm just giving an example. We've been seeing companies where maybe the share price was 4 kwacha, and it's now seated at 19 kwacha. So I could have bought at 4 kwacha, spent 4 kwacha, and that one share is now worth, for instance, 19 kwacha. So which means I've made 4 out of 19, 15. I've made another profit aside from the dividends. or 15 kwacha. So let's scale this up. So if I had bought 1,000 shares at 4,000 kwacha, and I'm now seated at 19,000 kwacha, and this is how our friends fund educational needs for babies. So our friends plan so meticulously that okay, we're gonna have a baby next year. Let's start buying them shares so that in 18 years, when they're going into university, we can sell these shares. But mind you, share prices could either go up or go down, like I said. So the use of licensed people, we have licensed people who understand what we're talking about in a more intimate way. We could sit down with them and they explain to us which of the listed securities do you think I should put my money. Then they'll ask you a lot of questions, including, obviously, they'll look at your age, they'll look at the needs, what are you trying to put your money aside for, and a few other parameters, because this affects how we make decisions, right? Let me give you an example. If you are almost a retired person like myself, I may not take as much risk as a 20-year-old. A 20-year-old probably has another 45 years before they can reach 65 and retire. So in 45 years, you can make a lot of mistakes, correct them, and still make it retirement. So for retired people, the advisors will still be able to advise them accordingly by looking at the risk. Because towards or at retirement, you cannot take as much volatility or the movement of up and down. So licensed people they are licensed by the Securities and Exchange Commission to see that they provide investment advice. So I would advise people, before you buy anything, before you buy your first share, your second share, you access advice from these licensed people. I think it's worth the trouble of speaking to these experienced licensed people.
CEO, let's look at episode 5 of the Money series. Let's watch this video.
At least she's sleeping now. You have no one to trouble you. You okay? Babe, are you okay?
Babe, the stock market has fallen. I don't know how we're going to manage.
Look, this is normal, okay? The stock market may drop at some point, but they always pick up. Remember, there are some factors, different factors that can cause this. It's not permanent, remember? Yeah?
You're right, babe. Resilience. It's not about avoiding the storm. It's about learning to stand tall through it. I almost gave in to the fear, but I can't. I won't. Markets fall, but they always rise again. I need to remember the risks in all investments. And it's not about how fast I win. It's about how long I stay in the game. Babe.
Huh?
Babe.
What's up? Yeah, what's up?
You see? I told you. Our investments are finally paying off.
Wow.
Now we can even afford to think about Chilofia's future.
You see, I told you. Yeah?
Wow.
Watch out for the next episode. This movie is sponsored by the Securities and Exchange Commission, the regulators of capital markets. Interesting that's here because both of them are saying, I told you.
Yeah.
But I think a key message there is that the husband mentions the stock markets may drop, but they always, pick up. Mm-hmm. And I would like to pick up the conversation from there. Yeah. What did he mean? That when the stock markets sometimes drop, but they always recover and pick up?
Yeah, I think we need to distinguish two things. The stock market is a broad market, and you normally find quite a number of companies. In our case, we have something like 23 plus listed companies. So you need to know how to invest. Yeah. Just like in any business, some of those companies could outperform the entire market, right? But there will be some that are struggling. So what the gentleman, I'm sure, was meaning was you should have invested in a number of companies. You should practice what we call portfolio diversification in order to reduce risk. I think the common term they say is do not put all your eggs in one basket. So the same principle applies. So out of the 23 companies, again, a licensed, experienced stockbroker would advise you after looking at your peculiar situation and tells you in which companies to put in, so that on average you are going up and not coming down. We have market data for the last, we've been keeping that index I was talking about, I think since 2006, which is something like 20 years. So on average, the whole market has been going up. I think that's what the gentleman meant. But they're troughs. But this is where, like, you're going up, you come down, going up, but on average, you are going up instead of coming down. And that's the way most of the markets operate. I would have given examples of particular companies, but I'm just giving them, like I told you, for illustration purposes. Not that I'm advising people to buy those stocks, because I do not have a license to advise. I think 4 or 5 years ago, the CEC stock was less than 1 quarter, literally. Like, if I remember, it must have been like 63 Ngwe or 65 Ngwe. I always think, like, why should I buy? Why didn't I buy the shares? You know, CEC is sitting at about 19 kwacha. So if I had bought 1 million shares, if I had the money and bought the shares 4 or 5 years ago at 63 Ngwe, I would have spent something like 630,000 kwacha. Let's suppose you retired, you are brave, you can take all the risk, so you put your entire 1 million in CEC 4 or 5 years ago, and now it's sitting at 19 kwacha. 1 million shares, which you would have bought at 630,000, you would have 19 million kwacha now, which is like $1 million in 5 years. So that's the way the markets operate. But look, we're not encouraging people to put all their money in one basket. Like I said, a portfolio diversification, because share prices, like I said, could go up or down. And there are various examples that we can give of securities that were below. I'll give you an example of another security. Pamosi had been selling at 8 Ngwe, and somebody came to buy out securities. They were buying out Pamosi. I think if you read the news, it was bought out by somebody from, I think, the Middle East. They bought out those shares which had been trading at 8 Ngwe at 4 kwacha 16 Ngwe. So again, if you had bought 1 million shares at 8 Ngwe, spent 800,000, you would have been bought out at 4.6 million within. So this is the way the markets operate. But this happens not from one day to the next. It's months, it's years. So people have to learn to be patient. This is akin to like planting trees. There's a tree that I have at home.
Yeah.
We had at home. We planted it about 15 years ago. It grew into a very big tree. I was like, why didn't I plant 1 million of this?
Of these trees.
15 years ago, I would have retired by now. I think that's the way we should be thinking when we're looking at investment. It's long term.
When the lady was jogging, she said these very words, that it's not about how fast I win, it's about how long I stay in the game. Is this what you mean?
That's the same thing. That's the same thing. So it's not like, trees grow really slowly if you think about it. But then, look, if you ever had a child and you thought you would find school fees, suddenly they're 18 and they need to go in. So that's how short 15 years is. So if you had planted trees for your kids when they're just, you're driving them from the hospital, they've been born, you go and plant trees, you'll be a good guy, you would be a good father, because you would have all the money, the trees would have gone. It's the same way, it's the same concept with our securities. Companies that are in a growth area, the prices of those securities is likely to go up because the values are going up. And by 15, 18 years, you just sell some of the shares, pay the school fees, and no stress.
You earlier spoke of how the people that are into retirement must really sit down with an investment licensed advisor to advise them properly. But I'd like to find out, what the main investment risks are and how, one could mitigate them.
I think one of the main investment risks is what we talked about, the market risk, where you can't do anything about it. The only mitigation is do not put your eggs in one basket. It's akin to building all your houses in one particular location. So if something happens to that particular, maybe there's crime that goes up in that area, no one wants to live in that area, then you lose
all your houses.
I remember sometime if all your houses were in Rwanda, at some time, maybe like 20 years ago, when the mine closed, everyone was literally moving out of Rwanda, right? You would have lost out. But the town has recovered. So this is the case of, in the long term, things seem to even out. So that's one of the risks, the market risk. There's also what we call liquidity risk, which is, like the name suggests, how quickly can I get my money when I need it? So that consideration has to be made. So again, depending on your peculiar circumstances, you need to look at this. Do I need to sell the shares immediately? Then you need to invest in those securities that are more liquid than those securities that are likely to sell faster than others. Then, of course, there's just a possibility that the company just ends up with bad management, which is not a market risk, but it's a risk very, very limited to the way the company itself is operating. So this is why people go to AGMs. This is why people should read the financials. This is why people should speak to licensed securities advisors who are regularly reading the news. Like, did you hear? Can you imagine that metal prices of a particular metal are going down? If you're not reading the news, the following day you'll be buying shares in a metal company where the prices are going down when everyone wants to sell. Unless you are advised by a licensed broker, we do not advise people to do it themselves. So these are some of the risks that every person should look at. But then, even the entity that you're buying through is a risk itself. We came up with the money mysteries because of the scams. I think viewers may have watched the scam episodes, and even the one review of the 4th episode that we did. So the person that you buy your securities through, your shares through, matters. They could sell you fake shares. So you need to buy shares from a licensed broker. If you're not sure whether they're licensed, call the Securities and Exchange Commission. Go to our website. The emails, the phone numbers are there. Speak to us and confirm is it true that Phillip Chitalu is licensed to sell or buy securities on my behalf? That's the beginning of protecting yourself. We always say, even if you live next door to a police station, you still lock your door, right? So that you have the first line of defense. Even before the policeman shows up to help you improve the security situation. So be knowledgeable, get to know what is happening, but use licensed persons so that they help you navigate the tricky financial markets.
CEO, how does resilience strengthen one's investment strategy?
I think we've all looked at it from one particular angle. It's about, even if things are bad, you know that the markets always recover. So you do not panic and sell your property, sell your assets, just because you've heard about one small particular negative news. I think get help. Get all the information. The bus could still be fixed and you continue the journey. Rather than say, I'm going to jump out of the boat and swim, when the problem isn't as great or as big as you thought about. You jump into a river, you meet the crocodiles, and something else happens. So resilience is basically trying to stay the course, but in an informed manner. I keep repeating, speak to the brokers. They'll probably have a more or a better insight into the operations of the business and be able to explain to you rather than jumping out without an informed decision-making process. I think that's the resilience we're talking about. We've heard of people like we discussed in the first few minutes, I'm always going in and out of businesses. You do not get to have the advantage of having all the knowledge about a particular business. So this is why most of the listed businesses, you'll see that they've been resilient to that extent because they have remained doing the same thing for a long time. There's a reason why businessmen do that way. Let's copy that and use it even as we invest in securities.
Part of your mandate is investor protection. The scams we've seen, the past few years have gone scot-free and people's monies have been lost. Just recently we had one of the worst scams, where millions of people's monies just went, into loss, and the people that scammed them have not even been caught up until now. Haven't you put in measures, to ensure that the right people come on the market and people are not scammed?
This is why we have money mysteries, to educate people. I think quite a number of people get scammed. It's about lack of knowledge, lack of awareness that there's a particular way you can identify a scammer from a non-scammer.
Sometimes it appears true because I heard
exactly, but look, if you only cared to call any of the regulators, the Pensions and Insurance Authority, the Central Bank, the Securities and Exchange Commission, or other security agencies, I don't think you get scammed, because they'll be like, Phillip is not on our database. But here's what happens. Because a few people get scammed, and what scammers do is they operate or appear to operate in a legitimate manner. They get money from Mr. Monza, 1,000, they double it, they pay back 2,000, and you now become one of their disciples to spread the good news. But all they're doing is trying to attract as many people as possible so that they can make a huge killing. So the first point, if the return appears to be too good to be true, there's no business in the world that doubles your money. Other than drugs or something, I can't think of a business that doubles your money on a daily basis.
Probably betting, maybe.
But what are the risks about betting? You could lose your entire money. We are not into betting. We are into investing. Okay? So investing is a slow process in terms of returns. If you start with one chicken, it will probably take 30 days just laying the eggs before they hatch, and even when they hatch, maybe out of 10 eggs, only 3 eggs turn out into chicks. So that's the same way the businesses operate. So if your cousin shows up, give me your gratuity of 250,000, I'll triple it. I would run away. I'll run away because it's too good to be true. What we tell people is if you went to a licensed, experienced broker, they'll give you some of the practical, historical performances. One of the best benchmarks is the rate at which government is borrowing. The rate government bonds is less than 20% now, about 17% per annum. So which means if you invest 100 kwacha, you get 117 kwacha in 12 months. And that's a very good rate at 17%. So if somebody says, invest 100 kwacha, I'll be giving you 200 kwacha every day, run away. That's too good. The question is, where are they going to generate the money?
Yeah.
Where are they generating the money? And those are the questions we should be asking our cousins, our friends, and everyone. Where are you going to generate this money? And that's the beauty of regulated markets because of disclosure, what we call the use of proceeds. Where are you taking the money? If they can't tell you which business they're going to invest in, run away. Because that's too risky.
That's too risky.
That's too risky.
But some people would say, yes, we've seen these scams come and go, but let me quickly invest my money, and then before they decide to scam us, my money will be returned. What would you be a word to people like that? Okay,
how do you know how far into the game the scam has gone? And that's one of the biggest risks. We've seen people who've gone on to, they invest 10,000, they're giving back 20,000. So they rush to a bank, even borrow 50,000 so that they can put in 70 to get 210. And that's when everything just breaks down. The simplest benchmark or factor, hurdle that a person should be looking at is the return.
The return.
If the return is too good, our advice is run away. Yes, a few people may make money because these guys are trying to have everyone hooked. But you may just lose your school fees. You may lose your child's future in terms of educational requirements. Some people have lost houses because they think they can buy 10 houses after investing the proceeds from one house. Any return above government rate is you're taking risk. You're taking huge risk. That's not the way businesses operate.
It's so bad, CEO, that sometimes even in churches you find that your pastor tells you that there's this product that you must invest in, and because you respect your man of God, you respect your bishop, you tend to trust. Sometimes these messages come from credible people that we look up to. But I'm just a young man from Kalingalinga. I don't even have the contact details of the central bank to really understand if this is true. I love the fact that you've already begun, awareness, programs. But how do people reach out? Who do they reach out to when they come across such lucrative investments?
Yeah, I think starting with a pastor, a bishop, or whatever their name is, are they a licensed investment advisor? I think that should be the biggest. Whether it's your cousin, your brother, your pastor, or anybody, ask them for a license. Are you a licensed investment advisor? If they're not, do not trust them. How do they reach us? We are on Facebook, we are on LinkedIn, we have a website, we have a permanent address on Great East Road opposite East Park. But we have a lot of police stations that are dotted around communities where we live. I think one of the factors that we should look at is because of the huge return that is being promised, sometimes people don't want to disclose. And because crime is committed within our localities, we should be the first people to be reporting. But because we are thinking we are going to benefit out of it, we don't report it. So by the time the regulatory authorities, the security agencies, become aware of a scam, is at the tail end. People have lost money. The scammers have probably even gone out of the country, and that's very, very usual. So there's little that we can do. So the best to the community, what we're saying is, when you hear of something, if it doesn't sound right, report to the Securities and Exchange Commission, the Bank of Zambia, the Pensions and Insurance Authority, or just simply law enforcement agencies, the Drug Enforcement Commission, the police. Pretty much a number of government agencies should be able to find us. If you can't find us, go through a police station. They should be able to find us. We have MOUs with all these agencies so that we work together to protect the public.
CEO, we've come to the end of the last episode of Money Mysteries series. Please summarize for us the main messages of the entire series.
In how many minutes? 2 hours or?
In just like a minute or two.
Yeah. I think the message is use licensed investment advisors. If the return is too good to be true, run away. Money is earned in a very, very, very difficult manner. You cannot afford not to do due diligence or ask around the questions. Scams are real. We are here chatting with you, trying to educate the public.
Yep.
I'm sure the scammers are looking for means and ways of twisting the message so that it sounds and tastes and feels good. So whether it's a pastor, a bishop, a priest, a Phillip Chitalu, a brother, a cousin, ask them for an investment advisor's license. If they do not have, run away. But the bottom line is usually the return. We had a scam where somebody was saying they'll be supplying, I don't know whether it's combs or rings or something, and they'll be giving, you give them a 500, they'll be giving you 250 every week for 42 weeks or something like that. Who's going to be buying these rings or combs or whatever it was? You know, so sometimes just basic logic will tell you this does not make sense. We've heard of people being scammed because the scammer can print dollars or kwacha. That should be verified with the Bank of Zambia. Do you license people to print dollars? But sometimes people say, no, don't tell the Bank of Zambia, because then they'll stop this. You'll be the only person to make money, and because of that, we lose money. Our advice is approach the agencies, the regulatory authorities, and your money should be safe.
Mr. Phillip Chitalu, CEO at the Securities and Exchange Commission, thank you so much for making the time to appear on tonight's edition of Money Mysteries.
Thanks for having me. 1 hour feels like a couple of minutes.
I know, right?
We'll be back here to educate and ensure that our people do not lose their money.
That's true.
Yeah.
Well, that was our discussion. We're looking at educating viewers on the market downturns, long-term investing, and managing key investment risks. My guest has been Mr. Phillip Chitalu, CEO at the Securities and Exchange Commission. On behalf of the entire production crew, my name is Andrew Mansa. See you next time.
My family has always been a generation of dreamers. That's why when I saw how my little boy loved to play with kites, I knew it was time to stop dreaming and start investing towards a reality that would make my son's dream to fly come to life. When it comes to investing, it doesn't matter how small you start. What matters is that you start. Because I invested in something long term, my son is no longer flying kites.
Good morning, passengers. Welcome aboard this flight. I'm your pilot for this flight. We have got taxi and we'll be taking off in the next few minutes. Thank you.
Money grows. Be a part of the generation of future investors by investing in stocks and bonds on the Zambian capital market. The Securities and Exchange Commission, protecting investors in the capital market.
Today,
start big with Big Tree Cornflakes.
Big Tree Cornflakes.
The end of your journey will be big. Stay on your feet, chase to achieve. Give it your all and just believe that it's gonna be big when you start big. Big Tree Cornflakes. Start big today. Big Tree Cornflakes. Remember to always keep it, do it in whatever you do.
Today, the best maize grain Zambia has to offer are perfectly toasted into golden flakes that pack a big crunch. Today, start big with Big Tree Cornflakes.
Pascal's showing his boss the efficient new technology they've installed. She is pleased, but now she's asking, why is that still there? Pascal explains that the wells can store many, many messages. The boss is not so pleased anymore. If you haven't upgraded your contact center yet, it's time to get business done better with MTN Business.
Good morning, welcome to the Milky Farm.
It's a happy day, let's have some fun. We'll start with the kiss to the pretty girls.
Then pour the milk,
the flavor's love, and this.
Pick your favorite flavor from chocolate, vanilla, strawberry, and banana. Milky Milkshake, the shake that moves.
Zambia, welcome to 100 days. We're counting down to the elections, and this is the road to the elections. It's the road to the 13th of August, or August 13th, however you want to put it. But welcome to it once again. My name is Malaman. I'm going to be running you through where we are today as we count down. We're officially at 92 days before you, Zambia, get to line up in the morning and cast your vote. Give that mandate to your councillor of choice, to your mayor of choice, to your MP of choice, and of course to your president of choice. Looking forward to how you are going to turn out, because guess what, come 2021 you did the thing, especially you young people, so congratulations. But is the youth agenda still as strong as back in 2021? Well, we get to look into that, and for now we begin with looking at Western Province. Now we're going to be analyzing the variables of Western Province. We'll be looking at what the voter registration was like back in 2021 and also comparing it with 2026. So let's kick off with 2021. Now back in 2021, the voter registration, and this is at national level, stood at 7,023,499. That is how you showed up to register to vote. When we move on to 2026, we're looking at 8